I think people hear IRA and again, it's just lack of education on this. It's not that this stuff's rocket science necessarily. It's just, it's hard. And especially in the dental profession or in a lot of professions, whether it's medicine, dentistry, and different people that are so hyper focused on their learning and mastering the skills that are required for their occupation, they don't get a lot of financial background or education through their entire schooling years. So there's different types of IRAs, traditional and Roth, right?
Correct. So IRA stands for Individual Retirement Arrangement. So IRA is for an individual. You could set that up on your own, assuming you qualify for a deduction or for a Roth. There's all these different tables we have to look at. We'll talk about that a little bit later. But the basic question you have is, what's the difference between a traditional retirement account versus a Roth retirement account?
Right. And is one better than the other? Should you be doing both?
Correct. So again, it depends on the facts and circumstances. So it depends on your overall finances. With a traditional IRA, any money you put into it will be tax deductible, assuming you meet the requirements for that. Mm-hmm. So you're going to get an immediate tax savings up front when you generally contribute to a traditional retirement account, whether it's an IRA or even a 401k. Mm-hmm. You're going to get upfront tax deduction. And then in your retirement years, as you pull it out, you're going to pay taxes on that money. Okay. So upfront benefit, taxes on the far end, but you're getting the power of compounding all those years, and you're doubling the amount of money you have to invest. So to me, traditional account is terrific for most people, especially those that are on a tighter budget and may not be able to contribute more than the limit. Mm-hmm. The other type of retirement account is a Roth IRA account. Mm-hmm. So again, that's a Roth individual retirement arrangement. Mm-hmm. With a Roth, you're getting no upfront tax savings at all. Mm-hmm. So you put $6,500 into it. It doesn't lower your tax bill by a penny.
And you're not doing that through your practice at that point, right? That's income. You've taken the income out, and then you would invest that post-tax from income you've received, correct?
Exactly right. So with an Roth, it's really after-tax money you're investing. Mm-hmm. So some people would say, well, why would I want to do that? Well, I'll tell you. The reason is that if you go into a Roth account, mm-hmm. every penny that you earn throughout your lifetime, including throughout retirement, and then every penny you pull out will be completely income tax free. Mm-hmm. That is a game changer for those people that are concerned. Well, I don't want to pay the tax on it down the road. Well, then a Roth might be the better choice, but you're not getting that upfront tax savings, mm-hmm. but you're getting a tremendous tax savings throughout all the years you own it, and also throughout your retirement years. Mm-hmm. So quick example there, let's assume you earn 10% on a Roth IRA account. Mm-hmm. You invested your money in a stock portfolio, did very well. That 10% is 10% tax-free. Mm-hmm. That's a game changer, right? Because now normally you'd be paying taxes on the dividends, interest you earn, capital gains. Every penny you earn, it's mm-hmm. going to be completely income tax-free. But again, these accounts have to be held until at least 59 and a half. And they also basically have to be taken out throughout your retirement years. Mm-hmm. So Roth is definitely a good vehicle. Another important distinction is with traditional IRAs, the government requires you to take out a minimum distribution, currently at age 72, even if you don't need the money. Okay. With a Roth, you're not required to ever take a distribution out. So if you never need it, you can eventually leave it to your loved ones, your children, and they can inherit that, and it'll also be completely income tax free to them. Okay. So definitely a difference between one and the other. I generally say if you're on a tight budget, but you want to save as much as you can, then go with the traditional because it's going to cost you less upfront. Mm-hmm. If you're making great income and you don't care about the tax deduction as much, especially if you're younger, because the more years you have ahead of you, the more the compounding, the more valuable Roth is, then a Roth may be the better choice for you.
Okay. All right, great. Okay. And with I appreciate putting those parameters on it because, and it may, I guess, to maybe a third option, you doing both, right? I mean, if someone wants to kind of max out, if they're maxing out on their traditional IRA and then they also want to be investing on a Roth, but are there certain income limits to the Roth, or is there a point at which you can't give to a Roth?
Right. Glad you asked that question, because that's a misconception. So with IRA accounts right now, the limit is 6,500, but that's all inclusive between Roth and traditional. So if you put in 6,000 to a traditional, the most you could put into a Roth that year would be $500. So you could do both, but between both of them, you cannot contribute more than 6,500 per year in an individual retirement arrangement account.